I'm a little concerned about a combination in the second half of global growth slowing down a little bit, not recessing or anything, but just slowing down after we've elevated everyone's expectations. And at the same time, maybe slowing down not enough to break inflation's sort of slow upward move. So assume that growth, I think we're going to get a 4.5% second quarter number in real GDP. But let's say it slows to 2.5 or something like that in the second half or a little less. At the same time, that global growth also slows. But even then, if we're at a 3.8% unemployment rate, Melissa, that even a 2.25%, 2.5% real GDP growth is going to be enough probably to push wages above 3 and keep inflation in general going higher. If that dollar that Bob just spoke of breaks in the second half on weaker growth, then you'd also see another spike up in commodity prices. And I think that put us in a difficult position. Weaker growth may cause some to question their earnings estimates for the year, but it won't be enough to stop the Fed from maybe having to lift rates or the bond vigilante from having yields going higher. And I think that's to me is a much bigger challenge than these current headline issues like the trade wars going on right now.
I'm going to play Pollyanna here for just a moment, Jim, so follow with me here. 4.5% growth, the tightest labor market in a generation. Inflation started to pick up because we had retail sales that were the best in 6 months last month. I mean, it just keeps getting better and better, it would seem.
Right.
So are you suggesting that this is as good as it's going to be and the only direction to go from here is down?
Well, I'm kind of suggesting that that it is too good, and that's kind of the problem. You know, Bill, a big part of this stock market, when it did the best, was when Main Street was not doing the best. We had a lot of excess slack, and you could grow the economy and not create any cost pressures, any interest rate pressures, any inflation pressures, no need for the Fed to tighten. Now we got a completely different situation. Good growth is no longer good for financial assets outright. It's good and bad. It does raise profits, but it also raises the interest rate pressures, the cost pressures that pressure profit margins. It forces the Fed to restrict the money supply and liquidity conditions, and we're dealing with all that. Here we have this phenomenal profit year and no gain in the stock market, and I think it's because of the dichotomy between good conditions on Main Street, which make more difficult conditions on Wall, and that's what we're dealing with.
Whoa, stop. What is going on here? Well, what you're looking at is a plummeted price of AutoZone stock in just a matter of an hour or two when it went up pre-market from 710 and fell later in the day all the way to 596. Why should you care? By utilizing a very simple option strategy, we were able to turn every $1,000 of investment from 9:30 in the morning till 10:45 a.m. into an excess of $10,000. That's right, literally a $10,000 investment produced in excess of $100,000 in gains. The crazy truth about stocks and options trading: most of the fortunes were created when stocks fall. So if you're not utilizing this crazy strategy, you're definitely missing out on thousands of dollars, and you're leaving that money on the table for somebody else. Look, these are the facts. Just think about it. Stocks drop actually much, much faster than it takes them to climb higher. So just take a look. There's your AZO graph right here. It took it a month, 2 months to get from this 580 level all the way to about 700. And look how fast it dropped just in one day. Now, how do we know that this had a potential to happen? Look, it has a history of doing these things at the same level at around 700. It did it last time during the earnings report. So you don't have to be a rocket science. You just got to know which stocks, when to take action, and you got to know how to find the stocks. Has it ever occurred to you that every day when the market goes higher, there's plenty of stocks that actually drop? Because if every day some stocks did not drop, then the market would go to the moon, just like Bitcoin, right? The reality of life, everything that goes up must come down. Look at the housing bubble in 2008. Bitcoin prices, when nobody believed, we put a recommendation at 18,800 to short Bitcoin. In other words, to make money when it falls. The bottom line is this: you don't need a market crash for you to actually profit on stocks falling. The opportunities are there every single day. You just got to know where to look for. If you grasp the simple idea that stocks fall much faster than they go up, you will be able to become a much more effective and efficient stock or options trader. Okay, hold on. So what you're saying is while everybody's chasing the stocks on the way higher, the real money is actually made when stocks drop Yes, that's exactly what I'm saying. If you'd like to learn more about this fascinating and yet such a simple strategy, I invite you to go behind the scenes with me where I will reveal to you how I turned 12,000 into 466,000 in less than 7 hours trading options with this strategy. And I know this sounds crazy, but I actually did it. And I want to share with you all the specifics, all the details of how I was able to accomplish that. So if you'd like to become a better trader, take action now. Click the link on the button below. Life is too short. Don't waste another minute. Today is your day.